Hello, everyone, and welcome. This is Jeff Foley with Paladin Financial, and thank you for tuning in to this week's episode of Paladin Financial Talk. We've got a great show. We're going to start off our new series this month on taxes, which we're going to focus on here for the next several episodes. And with me today, as often and always, is my lovely fellow host, co-host, Tony Shore. Hello, Tony.
Oh, you tricked me. I thought you were going to say Nikki.
I zigged when you thought I was going to zag.
You did. You did. I love being here with you guys. Great to see you.
You as well. And my much better half, Nikki Foley.
Oh, thank you. Good to be here, you guys. It's been a while.
It has been. Yeah.
It has been a while since the three of us were together.
Yeah, we're going to talk about that, the rotation we've had here going on. People that follow the show may have noticed, but I wanted to start off. We haven't had a dad joke here in a while.
Oh, do we have a good one today?
I think it's a good one. You know,
okay.
Nick, you know this one already. Jeff Quick in our office shared this yesterday. But Tony, what is orange and sounds like a parrot?
I have no idea.
Okay. Come back to that later. Come back to that. It's a cliffhanger. Cliffhanger, as they say in the
There's
business.
going to be a callback. I feel a comedy callback coming.
What if you don't remember?
I probably won't.
I feel like you should.
It'll leave the listeners hanging. Maybe in 3 shows from now.
I'm going to write this.
The punchline will happen.
There we go.
There you
It's
go.
official.
Yeah.
Okay.
Yeah. Well, you know what? It's been a while, again, since we've all three been here. And you guys have had some amazing growth this year from an employee perspective. I mean, you have a lot of faces down there. And I love how, Nikki, when you came on board, the team aspect of what you do at Paladin is so strong. I love that.
I think we've had some fun this year, and it's been fun to have new voices on the show. And so for our listeners, it may be good to go through who are some of these people and when they joined us and what that looks like and their roles on the team. So
Meet your paladins.
Meet your paladins, Jeff. You're so witty.
Look at that.
Always on your toes.
I love it. You're a marketing god sitting right there. Now, that's a god with a small g, but a god nonetheless.
Well, we added Jeff Quick, which is a voice that's been on here, I think, for the last couple years. So he joined us, I believe, all the way back in 21, maybe mid-21. And he serves in an advisor capacity. He has probably over 20 years of experience in financial services. He actually has a ton of experience on the tax side of things. I think Jeff got to know each other working on taxes and setting up a tax marketing firm. And so it's nice to have both of their experience from that perspective, since we are talking about taxes today.
True.
And so Jeff Quick also serves as a nice partner to help mentor some of the newer individuals in our organization. That includes me in my new capacity.
Awesome. Yeah. Yeah, he's been great to work with, and we've known Jeff for a number of years now, so that's been good. Yeah.
Absolutely. You know, I always bring this up in our meetings when we're working with our clients and prospective clients that Jeff Foley is just a natural educator, and, you know, you've done a lot to lead face-to-face events, for other financial professionals. You're on stage from time to time at industry events. And so I think that's important that it carries through as we talk about our, additions to our team and the employees and that side of things. And so do you enjoy growing people? Because I think that's something that has become a big part of who you are.
I do, yeah. Yeah, very much enjoy it. I've always enjoyed kind of the teaching element. So we do a lot of workshops and seminars in the Twin Cities area, enjoy doing those, and just kind of helping people to uncover new ideas and grow and explore new things. So that's a fun part of what I get to do. And actually, I'm wearing a tie today.
I like it.
Speaking downstairs at a advisor training event, so I do enjoy doing that, which, as an aside, camera might not pick this up, but I spilled coffee all over my shirt as I was walking in to present. So
you shouldn't have said anything because it's completely unnoticeable. However, the scent, it reeks of coffee in the studio right now. You are coffee scented.
Coffee and Tide pen. Yes,
yeah.
There we go.
Yeah, but you can't see it.
Yeah.
So let's go back to the people. We got sidetracked a little bit there, but we added Ellie to our team in 2022, and she had previously, she served in a paraplanner role initially with us, and that basically means that she was with Jeff in every meeting that he was hosting, and prior to that, she had a few years' experience of putting financial plans together and really designing those. So she came in with a very nice foundation of knowledge, had the practical experience when working with Jeff and supporting and helping our clients. And now she's working directly with individuals in our community, and she's working with those people on her own. So that's been a nice transition for her this year.
Yeah, Ellie's doing a great job. We've known her for at least 5-6 years or so, and great to have her as part of the team. She's doing an awesome job for our clients and really brings a lot of passion and energy to what she does, and very caring to the clients. So it's been awesome to see her grow. We also have added Nikki Foley here to our team this year. So she has over 20 years experience in our industry, has done a lot of different things. And this year she's kind of been our utility player and doing a lot of different things to get some things tightened up and improved and launched, and narrowing focus in 2024 like a laser beam, Tony. And Nikki the Laser Foley. I like that. A new office name for you. But she's going to be focused on launching our Medicare practice that we'll touch briefly on, but we're excited. We're going to be offering Medicare supplements, Medicare Advantage starting next year, which she has a lot of experience in that as well. And she'll also be working with clients. And for those of you that I'm sure follow us on social media and are listening to the podcast, that is through Nikki as well. So great to have you as well.
Well, Nikki, anyone who's worked with Nikki at all knows just how dedicated she is, how much work she does. I know that the company she left to join Paladin and be full-time at Paladin, they replaced her with about 4 people, and it still wasn't enough. They had to get 4 people in there, and they're still not covering everything Nikki did. So that just goes to show you the dedication and how hard she works. I just think that's awesome.
And she doesn't drink coffee.
I don't drink coffee,
which is amazing. But doesn't she mainline Red Bull? I mean, isn't there like an IV? No caffeine?
No.
I'm not a caffeine person.
That's crazy. Well, don't. I assumed you were, but Nikki, I can't imagine you then on caffeine. It would be like giving a squirrel caffeine. You just don't want to do it because you're just you're very active, very busy. So I don't know how you do it without caffeine.
Well, you guys have been kind to me, and I'm very excited about doing the Medicare side of things. My background is, and my degree is in human resources, and so through the employee benefits and health insurance specifically, I feel like this speaks to an area that I'm comfortable in, and I'm really looking forward to it. So this should be fun for us in 2024 to add Medicare to our offering to our clients.
Yeah. That's great.
Yeah, absolutely. Speaking of other things that have been a really nice thing for us this year is we brought on my brother, Matt Bryant, here in July, and I know that he's done a couple episodes now for our listeners.
He has.
He just comes with a wealth of knowledge. He's he has such a good demeanor. He's been in the industry for over 12 years now. He previously worked with our primary money manager, and so he knows the solutions inside and out, and he's very comfortable knowing where those might fit to help, solve a potential problem that might be out there and put them as an opportunity for our clients. So it's very good to have him.
Yeah, definitely.
Yeah, I love Matt. He's a great guy, super nice. And like you say, just his personality, very even keel. He's done a couple episodes. We're trying to bring him out of his shell a little bit for radio and podcasting. But yeah.
Well, he's great. He's done a nice job. So it's no longer just the two of you guys in here week after week. How are you? Are you guys doing okay having this little bit of separation?
We FaceTime every other day.
Yeah. I mean, the number of memes that Jeff sends me in a day has gone up. The number of photos and personal messages that really relate to nothing. But
I'm glad you guys can still have that time together. And thank you. Thank you.
I
for
do miss it
us.
though. Honestly, I loved doing the show each week with Jeff. So I was a little bummed when it got more diverse. Right?
Well,
you're just saying.
Thank you for allowing Jeff Quick and Ellie and Matt and myself to be a part of things.
You got a great crew. It's unbelievable.
It's been fun.
We also have Zach Langemeyer and Dory Petroff. Both are licensed in different capacities that will join on the show from time to time that are part of our team. So very excited about them being part of our team as well.
That's awesome.
And then Molly. Molly was a guest, a couple of months ago, and
Yeah.
I don't think she wants to be up here regularly, but Molly is supporting us in a part-time capacity, and so she might have some things to say when we get to the Medicare side and her wellness background. So who knows, Molly might pop up here from time to time as well. But let's get started,
I like
you
Molly.
guys.
She's been on the show before.
Yeah, she was our guest, and before she joined us in a part-time capacity, so that's great.
awesome.
All right, should we do this?
Yeah. So today we're going to talk about taxes, and one of the things that commonly comes up, people say, I want to pay less in taxes, but that's very much a vague term, and the most common one people are referring to is income taxes. But when we talk about taxes, we want to put a word in front of that to describe an adjective, if you will,
Sure.
to describe what kind of tax we're talking about. So you have different types of taxes. You have sales tax, which we pay here in Minnesota. You have the opportunity, the pleasure, the privilege to pay a sales tax anytime you purchase something, and that's that varies based on where you live. You have property taxes, which is the privilege we have to pay the tax if we own something. So there's a theme there.
Yeah.
We have Medicare and Social Security tax, which we have the pleasure of paying as we contribute towards Medicare and Social Security. And you also have gift taxes and estate taxes. So those are ones that often get confused. Gift taxes is if you gift money to another person, you may or may not have gift taxes that apply. And then you have estate taxes that may or may not apply depending on the size of your estate when you as a person pass. So we're going to be aware of what kind of taxes we're talking about. The most common ones we're helping people with are with income taxes and how to lower that long term in addition to estate taxes. So and you have income taxes that we pay, that when we potentially are earning income in different capacities, there's different ways that pops up. But those are various types of taxes we want to look at.
And never fear, we're not going to go into detail on all of these in this show. That might get long. You might be tired of us, Tony. You might kick us out.
Oh, no. Never. Never. Well, taxes, I don't mind talking about taxes as long as we talk about is there a way to minimize that tax burden? And that's something that you look at for your clients as well and work alongside tax professionals, right?
Yeah,
absolutely.
definitely. So November, we're going to talk about Medicare and Social Security taxes. December, we're going to cover more on gift and estate taxes. And then jumping into February, we're going to dig into property taxes and some additional focus on gift and estate taxes. So spend some time on each of these to make sure people understand how those work. And but right now, let's bring it back to income taxes and touch on those a little bit.
Thank you. I do. Oh, go ahead, Tony.
No, I was just going to say that sounds good. I don't mind paying Medicare and Social Security taxes because I know what it goes for, and I'm going to get benefits from that. It's the February subject, the property taxes, gift and estate taxes I have a problem with. Yeah.
You talk about broad topics, and taxes really are a key piece of almost every financial conversation. And we have that with when we talk to our prospective clients and clients, that's a big piece of what we focus on is every time you make a financial decision, it's likely that you're also making a tax decision and potentially an estate decision at the same time. And we're not just talking about investment management. There's all these pieces that work together.
Yeah.
All right, so let's go a little deeper here on the topic of income taxes, and I do need structure to go along with our conversation. So on the income tax side of things, people often file their taxes on their own, so they are comfortable maybe using one of the software programs that are out there. They may use an accountant or just an H&R Block or something of that nature, and so that might be an example. But income taxes, and this is the part that people don't really talk about, they're pay as you go. And so as the IRS website describes it, that's what they say is pay as you go. And this simply means that you need to pay most of your income taxes as you receive your income. So if you're a traditional W-2 employee, when you're onboarding with a company, what's one of the forms that they give you? They give you a W-4 to fill out, and that's where you're indicating how much you want withheld from your paychecks. And then what happens? Gets deposited with the IRS, right? Well, the concept there is, and that's a fairly simple concept, but it actually gets a little more complicated. And there's a topic called quarterly taxes. And so that might not be something that mainstream America knows about, but it's important, I think, that we talk about it just briefly.
Yeah, it's something I wake up about every 2 months and go, oh my gosh, did I miss the deadline? What month are we in? Yeah, quarterly taxes are important. You also want to look at if you have pension payments, Social Security payments, that are you having taxes withheld out of each payment? Thinking about that, does that need to be done in your situation or not? You file for Social Security, the standard is they're not going to withhold any taxes. A lot of people aren't aware of that until they get halfway or full through a year, and oh my gosh, I didn't realize taxes weren't being withheld. So you want to be aware of that. In contrast, self-employed individuals serve in both the employee and the employer role. So the concept of quarterly taxes allows those people to pay their income taxes in smaller installments throughout the year, and that helps to avoid a large tax bill when you go to file your taxes. So quarterly taxes are a way of life for self-employed individuals, freelancers, business owners. If you're a 1099 individual, that might be another reason you would be doing quarterly taxes. And a guideline from the IRS, you might want to pay your quarterly taxes if you expect to owe at least $1,000 in taxes after subtracting withholding and refundable credits. So you want to be aware of how that works and run some estimates, see whether or not you need to make quarterly estimates.
Sure. So quarterly taxes just means you pay 4 times a year, and that's for people who are self-employed. Does that also go for somebody who owns their own small business? Is that how they pay their taxes as
correct.
well? So self-employed or you own your own business, you need to pay 4 times a year rather than it doesn't get taken out every check.
Yeah, correct.
Okay.
And Jeff, made mention that, he'd wake up every couple months, oh my gosh, if we paid our quarterly taxes. And this was a new concept when you start owning, a small business, and it just is a shift in mindset. And I thought, well, why in the world do we have to pay quarterly taxes on a due date? I mean, we owe the taxes. We know we have to pay them. Let's just pay them at the end of the year. Who cares if we miss it? Well, it's back to that concept of what the IRS wants their money, right? And so if you know that as kind of your guideline as a pay-as-you-go, whether you're a small business owner or you are a W-2 employee or that pension and Social Security that we know that the IRS wants their money as you go. And so it's an easy reminder, and using that as a foundation of, do I owe taxes? Pretty good chance that you do as you're going along. So
Yeah. And those dates are what? It's the 15th, right? April 15th, June 15th, September, and then January, right?
Yeah, correct.
Yep. So once a quarter on the 15th, you pay those taxes. My wife was self-employed for a long period of time, and she had those quarterly tax payments, and so we did those. And but you don't want to miss them because you don't want to get slapped with a penalty, right?
Exactly. Yeah, and to do that, you want to estimate your income for the year and look at what deductions are going to come off of that, maybe credits that might apply to your situation. Divide that number by 4, and generally speaking, if you're about 90% accurate on what you're going to owe in taxes and you're paying that throughout the year, you're going to be okay. But
we weren't spot on, and we owed some one year, and then one year we paid in a little too much, and so they're pretty good about that, but you have to try.
Correct.
Yeah. You have to give it the old college try, right?
Yeah. And it could be underpayment penalties that might apply, but usually not a big deal.
Okay, so the point of this topic or this episode is to keep this broad and try to do as many topics that might apply to the masses here. And so the next thing that we want to talk about is excess money, or somebody that's prioritizing saving as part of their overall financial plan. What are some of the buckets that the money might go into, and then what happens from a tax perspective? So if you think about things, you're going to, your first thing you talk about is saving, simple savings. You also have the opportunity to contribute towards retirement. So that might be another bucket that you're dropping money in. And then third, if there's additional or excess money, brokerage accounts or investments. That's kind of the third tier. So let's talk about each one of those. And the first one being just savings account. There's the traditional savings account that most people have known probably since they were a child. You walk into a brick and mortar organization and you say, I'd like to open a savings account, and you put some funds in it. Over time, though, there's also been the establishment of something called a high yield savings account. And this is where they have removed, in most cases, the brick and mortar. And what happens when you remove brick and mortar? Your expenses go down as an organization, which allows you to pay a higher interest rate or percentage back to the person investing the money. So a high yield savings account has usually a higher interest rate that you could earn on the dollars inside that account. So those are two basic categories of savings account that you might put your cash in. And then when you withdraw it, so when you put that cash in, you have already paid income tax on the dollars you have earned, and therefore the only thing that you might be responsible for paying taxes on is any interest that is earned. But a traditional savings account, how much interest usually is earned on that? Very
the
little.
donut.
.0.
Donut.
Yeah.
You also have the next big category is retirement accounts, whether that's an IRA, 401k, 403b if you're a teacher in some capacity such as that, TSP if you're a federal employee. And within those, you have pre-tax accounts where when you put that money in, you get a tax deduction. It stays in that bucket and it's shielded from taxes, grows tax deferred until you take the money out at some point, and you owe taxes on every dollar that you pull out. And you have to typically reach age 59 and a half to pull the money out without also paying a 10% IRS penalty. So tax deduction up front, you're kicking the tax can down the road, comes out taxable. The other category there is Roth money. So you don't get a tax deduction going in, grows tax deferred, comes out tax free, subject to certain rules. So be aware of what type of accounts you have, what makes sense for you. And a lot of times the tax profession in general is very dedicated to showing you, hey, we saved you money this year by putting money in on a tax advantage basis. You get a tax deduction, but that's not necessarily the best solution long term.
Yeah, no, that's great. And then the final category, you satisfied your liquidity by having some savings. You have satisfied your retirement side of things and the decisions that you can put money towards that. And then if you have excess or leftover, oftentimes people start to look at a brokerage account. And so back to the concepts, a brokerage account is one where you use cash that you have already paid taxes on in most cases, and you're putting it in an account from an investment perspective. So again, you earn that money, you have paid your income taxes on that. So once the money is in that account, you have a couple things that may be happening. One, you may be earning dividends on it, and you pay those taxes as you go on the dividends in many accounts. Don't always earn dividends, so that's not applicable to everything. And then if you sell it for a profit, what do? You pay taxes on that profit only. And so you always got to think about, has the IRS collected money on the growth? And if they haven't, then there's a good chance you're going to have to pay taxes on it. So it's fairly simple when you look at the simplicity of it, but it's sure there's a lot of moving parts when you start talking about, all the different kinds of taxes and when and how and so forth. One other thing to note on those brokerage accounts, that if you hold those hold the funds in those accounts for more than a year and then you sell it for a profit, most of the time those taxes are going to be at a lower rate, and that would be a long-term capital gains. But lots of moving parts. This is a very high-level, basic conversation, and we'd need to know what is applicable to the individual.
Yeah, you forgot about, I have a savings category 4, which is my record collection, my vinyl collection. I have to have a bucket for that I save in.
Well, the government didn't know about that until now, Tony.
Yeah,
so there you
and
go.
that money,
tax.
That money goes in after taxes and comes out tax-free, but then I pay sales tax. So. All right, well, income tax is a big topic, and you're right, you took a broad overview, and this can be a lot, like you said, and this is where we tell people out there, our listeners and viewers, you have to work with a good financial services professional, people like yourselves, to have a plan in place, sort this out. You work alongside CPAs. You make sure that they have an overall plan or a tax plan that fits into their financial plan and their retirement plan, correct?
Yeah,
right.
Absolutely. It's we talked about, Nikki alluded to this earlier, you have your financial plan, your estate plan, your taxes. They all need to work together. They don't live on an islands by themselves. So a lot to consider there, but we're going to be doing here in the next couple months, November and December, we're going to be doing some tax planning seminars, workshops, and also estate planning. And we're going to have those on our website, which is paladinfinancial.com. or paladinseminars.com. We don't have a couple of those dates listed out there yet, but stay tuned on that. If you're interested in attending one of those complimentary events, go out and register. And next week, tune in. We got a fun month, as we talked about in the beginning. We're going to do some in-depth look at some tax deductions for non-business owners, tax deductions for business owners, real estate, a lot of fun stuff. But most importantly, you thought I was going to forget, what is orange and sounds like a parrot?
No idea.
A carrot. we leave you with that.
Wow.
Such a good one.
Wow.
Such a good one.
At that, I have to say, that does it for today's episode of Paladin Financial Talk with our hosts today, Jeff and Nikki Foley.
Thank you, guys.
Thank you.
Take care.